Hey guys, my name is Faizi and this channel is about finance and investing, and today we're going to be talking about Raiz Invest, the ticker code being RZI. Now personally, I'm quite interested in this company because working in the financial industry, fintech really excites me because there is so much room for innovation. And the stock price has done quite well as well, giving a 170% return for 1 year. And today we're going to be doing a short overview of the company, its financials, and my personal opinion on the stock. Before we begin, this video is not financial advice. I'm not a financial advisor. We are speaking in a very general sense only. I just have a passion for investing in finance, same as you, so let's get into it. Now, Raiz likes to call themselves a mobile-led financial services platform, but basically what Raiz does is that it's a micro-investing app, which means that it allows people like you and me, retail investors, to get started with very little amounts of money, as little as $5. And you can use the top-up feature as well, which is quite unique to Raiz, where it essentially rounds up your everyday transactions and invests the difference. So because of this app, the everyday person can get started with investing, and it's not just limited to people who have lots of money. Now in this slide, you guys can see some financial highlights, but we will discuss these in just a moment. And this is the revenue model of Raiz, which changes based on which portfolio you choose, and each portfolio has different risk ratings. And right here, they even have a Sapphire portfolio, which includes cryptocurrency like Bitcoin. And you can see that most of these fees that get charged to the customers are $2.50 per month, but this announcement was released on the 24th of February, and in a recent announcement on just 1st of March, as you guys can see over here, they have increased their fees from $2.50 to $3.50, which is an increase of a massive 40%, as you guys can see. Now personally, full disclosure guys, I don't use Raiz right now. It's been too costly for me in the past, and right now it's even more costly. So personally, I can't comment on how this will affect my investment strategy. Now by the way, if you guys want an in-depth look into Raiz and some other platforms like Spaceship and CommSec Pocket, I've done a full review comparing these three platforms. There should be a link in description, and there should be a pop-up on your screen as well right now. Now for Raiz, the excuse that they're giving for increasing the fees for customers are that they're basically saying that there is increasingly more corporate governance costs associated with delivering financial products and services that require ongoing investment in technology and resources such as people. So they're saying that they're doing this to remain compliant and protecting the customer's data and investments and etc. So essentially, Raiz is saying that despite the fee increase, they think that they're still competitive, and they're hoping that this $1 per month price increase can still keep customers around. Now guys, if you invest with Raiz, you might be pretty angry about this, and I can fully understand why. But also keep in mind that price increases are not uncommon. We've seen this in the past with businesses like Amazon increasing their monthly fees for Australians recently. Now Raiz gives a monthly update to its customers as to how many customers joined compared to the previous month, how much the funds under management increase. So when the March 2021 results come out, it'll be very interesting to see if the growth metrics for Australia slowed down or if they kept on increasing at the same pace, because a lot of people are quite bummed out about this increase. So on one hand, you've got the customers which are leaving the platform, but on the other, Raiz is increasing its monthly revenue. So hopefully for the case of Raiz as a company, we hopefully should see an increase. Let's see. Because as you guys can see, the maintenance fee is a massive driver of revenue, because recently this fee accounted for 63% of the overall revenue. So with this price increase, we should see the maintenance fee taking over a bigger proportion of this overall revenue. Now, the Australian growth strategy for Raiz is to grow active customers, grow revenue per customer through products and services, new products and services to improve customer engagement and increase customers' lifetime value. Similarly with Asia, they want to increase active customers in those countries, plus improve customer engagement and so on. So hopefully this price increase helps with that. Now, as you guys can see, Asia is a huge opportunity for the business because they've got a population that is many times the size of Australia, and if Raiz can continue to provide them with a good investment solution, it should yield pretty good results. Now, looking at the most recent monthly metrics that the company releases every single month, we can see that Asia is building strong momentum because their signups have increased dramatically compared to Australia. So if we compare Australia, the 1 month change is about 4.9% in terms of active customers, and customer signups increased by 2.8%, and investment accounts increased by 3.8%. But if we compare these exact same metrics to Asia, looking at Indonesia first, the 1 month is about 14.6% for active customers, and customer signups and investment accounts have increased by 19.2% and 17.1%, which is double-digit growth, and it's just insane to see that. Similarly, we're seeing double-digit growth in Malaysia as well, with active customers increasing by 11.3% month on month. And the 3-month change is absolutely insane at about 85% and 60% for Indonesia. So we can definitely see why Asia is such a huge opportunity for the company. Now we can see that the average revenue per user is increasing, and we should see this trend moving forward with the price increase. And the platform has generally been growing pretty steadily. There was a bit of a dip back in March 2020, and we can probably say that this is because of COVID, because of the lockdown and the overall panic. People may have sold their investments or withdrew, so that's pretty understandable. Now Raiz has something called Raiz Rewards as well, which is basically an affiliate program where users can shop through the Raiz app and they will get rewarded if they shop through it, and Raiz also gets a margin on each transaction. And looking at this slide, the customer reviews seem to be quite nice as well. And looking at Indonesia specifically, the momentum seems to be quite good, and there are still a few pathways like roundups, personal finance to be developed, so we can see this progress moving forward. And it's a similar story for Malaysia as well, with these features being developed as we speak. So that's all well and good, but how do the financials of Raiz stack up to all of this? Let's have a look. Now looking at the profit and loss statement, and we can immediately see that revenue has increased quite solidly from about 4.5 million to 5.2 million between 2019 and 2020, which presents a gain of about 17%, driven by, of course, the huge expansions in the Asian region, and expenses have slowly increased as well at roughly the same pace. The professional fees have gone from 637 to 539, and we can attribute this to the additional legal costs and the licenses that they would have paid to make sure that they can operate legally in those countries and follow all the regulations. But looking at the marketing spend, this is quite a huge increase because it went from 686 to 1414. So with the whole launching process in those Asian countries, we can attribute this to the advertising expenses that Raiz would have paid to have a successful launch. Now the loss for the period has grown from 2566 to 2903, which has mostly got to do with the marketing spend. Now obviously we can see that the company is making a loss here. However, the revenue is also fast growing, and they have a solid roadmap for expanding into future countries. Plus the traction from the Asian countries right now seems pretty good. However, for this to be sustainable, they need to have a solid cash base. So let's look at the balance sheet. So looking at the cash and cash equivalents, we can see that the cash of 11 million is quite nice to see, along with some other assets as well. And when we compare this to the current liabilities, which are down here, the liabilities seem to be quite light, which is a good sign. And the current ratio of this company is 3.92, which is something that I feel comfortable with, given that the company is not making a profit right now. So they've got the cash available to sustain them for the next few reporting periods. Now looking at the cash flow statement, we can see that the receipt from customers has grown from 4708 to 5555, and that presents a gain of 18%, so I'm pretty happy with that. And the corresponding payments to suppliers have also gone from 6115 to 6903, but that's only moved up by 13%, so the change is not proportionate, which is good. Now I want you guys to have a look at the government grants and tax incentives, because this made up quite a large part of the cash flows, which is 697 in the previous year to 999 in this current year. So although it is pretty good that the company is taking advantage of all of these grants, as they should, this is something that we can't really rely on, given that we're all in a situation where things are changing pretty rapidly. So this sort of cash flow is very external to the business, because tax laws can get revoked, grants can get abolished, and so on. So it's good to look at these things very critically. But overall, as I said earlier, when we reviewed the balance sheet, the company is in a good position when it comes to its cash point of view. Now let's actually dissect the revenue and break it down and see what the composition of all the revenue items are. So as we discussed before, the maintenance fee take up a massive proportion, so this is quite evident over here, and the price increase should help with this even more. Management fees have gone down though, which is a bit surprising, but the other items on this list look fairly okay. Now what do I think of this company? Let's get into it. Firstly, I just want to say that I'm not invested in Raiz right now, either through the app or by buying its shares, but I do think it's a pretty exciting offering. Now guys, I've been making videos on YouTube and TikTok for the past 7 months, and I always encourage people to research and invest when they can, and apps like this really help them get started. And they essentially democratize investing and give access to the everyday person, and they make it super easy. Now compared to traditional brokers like the big banks, the minimum trade size and the minimum buy-in is like $500, and if you're just starting out, you're not going to have that much money, therefore this is a good alternative. I personally think that it's pretty good that Raiz is expanding into other countries apart from Australia, because there's only so much growth that can happen over here. And for fintech companies like this, they want to try and expand outside overseas as fast as possible as soon as they get traction in their home country. And the beauty of this business is that this can be easily deployed in developing countries as long as they abide by all the rules and regulations. Now Raiz has set a pretty ambitious target of $1 billion in funds under management by December 2021, and I think based on the current growth rates, they should be able to achieve that because the signups and the active investors are growing quite quick. Now for me personally, the main thing is about finding a good entry point, so this company is going to be definitely on my watch list for now, just like I have Dough and IOU Pay on my watch list right now. These two are pretty great, exciting companies as well, so go check these two videos out. And guys, please like and subscribe, and I'll see you in the next one. Bye now. Or if they kept on